Welcome to Rich Key's video blog, where we unlock real insights into the financial markets, share trade ideas, and discuss market vibes one blog at a time. Subscribe and unlock the door to a brighter financial journey.
Welcome to Rich Key's trading channel, where we discuss the market, discuss some financial analysis, chart analysis, trade ideas, and anything got to do with money. This is the June the 14th, and I'm making this recording over the weekend. All the markets are closed except for the crypto market. I'll be covering the Dixie, BTC, I think SPY, SPX, and the NASDAQ, as well as gold assets. I might throw in a couple of tokens that might be of interest if time permits. Please note that the content on this channel is for educational and informational purposes only and does not constitute financial, investment, or trading advice. I'm not licensed financial advisor. Always do your own research and consult a qualified professional whilst you're making any financial decisions. Investing and trading involves real risk of losing capital, money, and past performances based on chart analysis is no indicative or guarantee for future results. Use this content at your own risk, and that's a disclaimer for all y'all listening to me today. Now the disclaimer is out of the way. Let's see if we can share ideas and brainstorm our intelligence together and figure out what the market is likely to do next. Like I said, I'll start over with the Dixie, DXY. This is from capital.com. That's where we get the data feed from. Dixie is still in a strong downtrend, as we can all see. It's still trending downwards. So the trend is important. There is an active weekly RSI divergence that I would like to also show. But when I say it's active, it means it is not confirmed. We need another weekly candlestick to print before we can confirm that RSI divergence on the weekly chart. So if you look at the weekly chart, we came down to this level. This is the previous, use my demonstration candle so we can see. Yeah, so we came here from this low, we went up, and we've come back to this low. Actually, we've come to a lower low, but RSI currently, as we can see from here, is at a higher low. This is the previous low. It's still at a higher low, whilst price has made a lower low. Now, of course, if we do print a green candle next week, okay, this is a weekly, then this low on RSI gets cemented, then we would have something similar to what we had here. Where we came this low, we went up, we made a higher low, and we're off to a nice rally. So it's not confirmed. That's why we call it active divergence on the weekly. Now, on the daily, we do have some divergence as well, but it's not very strong. So I would even give it a lot of time. What is significant that we need to pay attention on the daily is the daily candle that we printed. Now, this candlestick tells me that some big players did step in on Friday. I presume due to the Middle East tensions, probably some banks or some investors are probably loading up on some dollars for, just in case. So for me, yeah, there's no change in trend yet. I would take a change in trend when we do go above 98, 929 thereabout. If a price is able to move above this level and close above this level, I will start to consider that okay, trend is changing. Until then, I still assume the downtrend is intact. We're still below the 9-day moving average. We just slightly went off the banks of our river, which is the Bollinger Band. That's what I call my river. And so when price gets beyond the river, we get a little bit of a stretch. And as you can see, we did bounce slightly in here. To really prove this, I want us to step down to probably the 8 hour chart, or maybe even the 4 hour chart that would show you what happened. So if you come to the 8 hour chart, you realize that yes, we had a whole candlestick open and close outside KC channel, outside the riverbanks. That's like extreme. If you have this bell curve, the further away price moves away from the mean, the more likely it will pull back towards the mean. So we had a nice pullback towards the mean. This was a bullish engulfing candle that was printed on the 8 hour chart. That gave us a nice move to a shooting star here. But with this 8 hour shooting star, I don't expect us to keep grinding up. And so I'm very bearish still on the dollar. Not super bearish as this candlestick hasn't yet been overpowered yet. But so in conclusion, I expect Dixie to go a little bit of a sideways price action and potentially make it to its target of about 96, about 96, 801 is my target for Dixie. Now I'd like to cover BTC chart. And on BTC, we do have a weekly closing potentially because the week is not ended. Today is Saturday. I'm recording this. It's just about 1 p.m. now. And as we can see, we're just having a red candlestick. After a support hammer, that seems like we're kind of going to close below it on the daily chart. So I'm pretty confident at this point of the day that we're going to close below last week's closing on the weekly chart on BTC, as you can see right here. So if we do close below here, that is bearish. Point number one. The fact that we couldn't close above last week's close is enough to tell me this is very, very bearish. And even if we get some bounces, ultimately we're going to go down on BTC. There are a few other things I would like to also share on this BTC chart before we even look at the indicators. The Let's look at MACD on the weekly chart. The MACD on the weekly chart right here is showing that the momentum is tailing off. As you can see, after we hit this May 19th momentum histogram bar, we've just been declining and declining and declining. All right, that's like what happened here. We hit this, we started declining, 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 and we haven't crossed the zero line yet. So don't throw in all the towels yet. Nothing is confirmed until we go below zero. If we do go below zero, yes, we can be in the bearish camp. Currently, it's a battle between bears and bulls, and I wouldn't give the winning cap to anyone yet. So, based on momentum declining, I'm more inclined to the bearish side on BTC. There are other few good things that I'll probably like to highlight on BTC as well on the daily chart. All right, so on the daily chart, we have this triangle that was formed all the way from the rally. I struggle to change the window size because it messes up with the video conversion. So I'll try and keep it as it is. But since we rallied all the way from about that was about what? Where did we get to before this rally? 70 something thousand, maybe 80,000. That whole rally with this pullback from that high of 112. So we did rally from about somewhere around 80,000 thereabout, and made it all the way to about 112,000. And then we had this sharp pullback. This is the pullback I've been talking about. This pullback was very significant. I count this pullback as wave 1, 2, 3, 4, 5. That's an impulse wave, and I've labeled that one as an A. Now we've done a move here, 1, pause, 3. So this, I consider this as a wave B, technically. Um, Now, would this be a wave C? Because that's what I'm looking at currently, that this might be a wave C that comes below this low here. Okay, how far would go? I'll first put a target here, 103, maybe 100, 354 first. This place was a place of support. So we'll come here first, and then when we come here first, we see how the charts print, and then we'll decide whether we're going to break down to the 97 price zone. But ultimately, I think BTC is going down, and my potential target for BTC is probably going to come somewhere around maybe 97, 768, 97, 768, and probably would consolidate in between 97, 768 to about 93, 875. So that's my take on BTC, and the reasons for all this is what I've already enumerated from the beginning, that it's looking more bearish than bullish. um, the good news is that there are no big selling candles so far on my chart. When I look at the weekly, the daily, okay, we had a hanging man here, but no big institution has shown on my chart that he sold off. So we might do some consolidation before maybe they might sell off. I don't know. But I'm more inclined to the bearish side, that BTC comes all the way down to 97, 768, and probably will consolidate in between there. There are a few RSI divergences also on the daily chart that support this, and I'll briefly like to show that. So if you look at the RSI chart, this was the previous high. Okay, we came down, came down, came down, had a strong bounce back up. Okay, we didn't even make it back to this high. Okay, this is a lower high in my opinion. And with this lower high after a bearish setup that was printed between the RSI of May 10th and RSI of May 22nd, we've had a strong impulse down below the 30 mark, and we couldn't make it back up to even this high. This is a bearish situation that I would consider. If you look at it on the weekly still is showing some bearish weakness in RSI. This was the previous high. That was for when the time that BTC went to all the way to 112,000. If I may show it up here. So this was the previous high, somewhere right here. Okay. Yep, that was the previous high, previous top high. RSI was at this level. We came all the way down, then we rallied back up, but we rallied back up to the same high. As a matter of fact, we went higher high. If you look at this chart here, we made it all the way to 112. Previous high was around 109. So we actually exceeded the previous high. But if you look here on your um, RSI chart, you would realize that if this was 109 and this is 112, right here is a divergence in play. Um, we might need one more print to get a confirmation. So there's still an active divergence on the weekly. Um, Other than that, I think my stochastic cycle is also not turned up or bottomed out yet. Since we hit this high, and I was calling that BTC might be doing a strong pullback. We're still coming down until this bottoms out, turns around. I still expect some more downside on BTC. The next asset that I like to cover is the SPX500 in the index fund. And XPX has done a nice rally, almost reclaiming its previous all-time high, right about 61, 158, thereabout, 151. Okay, so the thing with XPX is this whole move up is a retrace of a previous sell-off. Okay, and it's more or less forming a double or triple top for me. Of course, we haven't exceeded this high. That would have been a great one, because then you get the divergences to confirm. But currently, I consider this as a attempt to a previous high, and it's failing. And I'll show you why it's failing and why I'm beginning to feel very bearish on XPX. Um, First of all, we should realize that. Nothing is confirmed yet on XPX until we break below the 20-day moving average. Okay, price could consolidate in between here, the 20-day moving average and the previous high for a minute. As you can see, we came to the 20-day period and it had support. Here we came to the 20-day period and we had some support. So until we break below the 20-day period average, if you're going to short the XPX, know that you're taking a risk and you must protect your trade. Um, The one thing I do say is that I do see on XPX is that more likely this is going to consolidate for a little while, um, before it breaks this 21-day period average. However, I don't expect us to exceed this 6,071 mark here, based on this candlestick that we printed on Friday. If you switch to the weekly, you would understand what I'm saying. So whenever you get a weekly rejection of value above previous week, and we kind of have this kind of red candle printed for the week, chances are that you're going to come down first. Okay, with a red candle, red volume, you're going to come down first before even if there's any further upside. The one good thing is that MACD is still in positive territory on XPX. However, my stochastic cycle is beginning to show weakness. It's still a cycle high, but it's beginning to show weakness on the weekly. Now, if you switch back to the daily, XPX on the daily, RSI is showing a lot of weakness. Now, if you look at this RSI level, this is the previous high level, and we had a nice retrace down, and we've gone a higher high. Right here is a divergence. Now I'll show you right here. So this was the previous high. We went a higher high, but if you look at your RSI, this is the previous RSI high, previous RSI, the next RSI is showing a lower high. Right here is a divergence, and MACD is actually giving up the news long before. MACD tick below zero here, and though its weakness is still below zero, so XPS is looking weak. I don't see energy to the upside. I see potential build up for a reversal. And if we do reverse, my target wise for XPX in the meantime, like I said, until we break below the 20-day period average, we could consolidate there. But once this 20-day period moving average is broken, I would expect this gap to be filled. This gap that was created on our way up. We open here, we gapped up to this point and never revisited this whole gap. So I expect this gap to be refilled, which means my initial target is somewhere around here at 57.16. I'll briefly touch on NASDAQ 100. And again, with the NASDAQ 100, the picture is not much different from the XPX, so I wouldn't spend too much time on there. I try to keep this video under 20 minutes. Um, yeah, so the XPX is no different from the NASDAQ in terms of the chart patterns that we are seeing. Likewise, you can see this is on the daily chart on NASDAQ. Like I said, RSI shows declining strength. This is not showing any bullish strength. MACD is already ticked below zero. It's already pointing down. Momentum is down. My stochastic cycle is down. All this suggests to me that there is a stronger move down in the near future. One thing I do probably would say is until we break below this 20-day period average, you probably would do a little bit of choppiness sideways here and there. um, but there was a lot of people taking a position around 21,455 on the Nasdaq. There was a lot of trade transaction, not necessarily buying. It just says a lot of exchange happen around this price zone, and around this price zone, you could see a lot of consolidation happening. But once we break below this 20-day period average, I'll have more confidence that Nasdaq will be coming down. If we do come down, I expect Nasdaq to come all the way down to close this gap, the first gap that it created, the last but one gap that we created on our way up. There's another one further down, but let's go step by step. When this gap gets closed, we'll look at the next gap. So therefore, my target for Nasdaq, if for the pullback, once we break below the 20-day period average, will be around 20,241. And I think with this, I would briefly touch on gold next. This is a daily chart of gold, and I'm very bullish on gold. I think gold is now going to a new all-time high, way higher than most people are even looking at. Once we break above this high, we off to the races. It's very bullish on the charts for me. Number one, I drew this bullish peanut triangle, similar to what we have on BTC. If you remember, I was showing you the same kind of triangle on BTC. Now, whenever you get these triangles, depending on which side of the triangle you're going to break, it will determine whether it's going bullish or it's going bearish. And for gold, yeah, we came inside the triangle, we did some zigzag. Now we're broken outside the channel, We have this strong 1, 2, 3 matching soldiers. Okay, that's a matching soldiers candlestick pattern set. That's very bullish. Swing it up to the weekly chart, and you see it's this is just parabolic move. Okay, strong uptrend. There's some consolidation here, and I was looking at this consolidation all along. Yeah, those that did a short here, you might have made some money, but it's just, for me, it's consolidation. Particularly when you're still above the 9 weekly moving average, I consider that as consolidation. You had an inverted hammer last week, which should have suggested to anyone who was paying attention that this would be going up. The problem with inverted hammers, especially in consolidation, is that you need confirmation. So whilst we had this, yes, one would see this as a shooting star, rejection of value, and therefore you need a confirmation if you want to trade on this candlestick. So last week was a risky one to take unless you were using other tools, such as maybe momentum, RSI, MACD, CCI, whatever tool works for you. But now we're having a strong bullish confirmation, okay, from last week's suggesting that all the selling that took place. So what this candlestick means, that there was a lot of selling, but all the selling was absorbed. Previous week was a strong sell-off. You could see a lot of selling. They closed in here, but here we get a selling that takes place last week, and all the selling was absorbed. And this week ending, the bulls have taken back control. Anytime you get this strong bullish candlestick, especially once we have exited this triangle that I placed in here, this tells me we're going way much higher. My time on recording is exhausted, but if you're looking at my target for gold, I would just run it up. My initial target is around 3,544, and my ultimate target for gold is 3,725. I appreciate your time for listening to my video and listening to my analysis. Have a great trading week. Cheers.